name is Vian Ulifi, partner at Mazars South Africa, and I'd like to welcome you to another installment of Mazars 3-Minute Spotlight, where we have express interviews with industry experts. Today I'm joined by Nafis, who is our banking specialist within Mazars South Africa.
Thanks, Vian. Thanks for having me.
Nafis, I think let's jump into it. Banks is an age-old business model in the sense that they were created to hold customers' funds and issue IOUs. But the banking business model has changed a lot over the last couple of centuries, to an extent that banks perform rehypothecation or apply fractional reserve model banking. Can you perhaps just explain those two concepts to the listeners?
Sure. So the fractional reserve is basically when banks hold only a limited amount of cash allowed for withdrawal by the customers, and the remaining cash or deposits are utilized for generating more loans. Your typical rehypothecation case is when banks use the collaterals that are deposited by the clients for its own transactions. I mean, of course, in return, these benefits to the clients from low cost of borrowing. Basically, this engagement itself is rehypothecation.
So over the last year, we've seen instances such as with the US, and it almost seemed like a domino effect of banks filing for bankruptcy. What was the exact reason for this? And is this something that could potentially also happen to South African banks?
Yeah, look, I mean, there were a number of reasons for the collapse. One, including the lack of diversification of the portfolio from the US bank. Of course, in this case, many clients decided to withdraw their deposits simultaneously due to fears of banks' insolvency. And as mentioned, being a fractional reserve system, banks were only holding a fraction of the cash, the deposits. And of course, they couldn't meet the demand of the customers, and this resulted in the collapse. Will the South African banks be going through similar instance? In my opinion, its likelihood is very minimal, and the main reason is the fact that in South Africa, the banks do not have the same exposure to investment banking and derivatives as the global banks. And of course, our regulatory systems are very effective in South Africa.
Makes sense. So the other question that I have is, banks aren't usually limited to the country that originated from, and banks tend to work across borders and various jurisdictions. I mean, from that perspective, I would imagine a bank would like to have an audit firm with a global footprint to be able to service them. How has Mazars positioned themselves in the market and utilizing our integrated model on a global basis, of course, to service clients in this industry?
Look, I think integrated Mazars model has helped us a lot from starting our banking practice within South Africa, but also growing this practice. Our global reach has allowed us to secure some of the major work with banks. And of course, we also share resources and trainings with our global offices. And this basically ensures that competency and expertise are maintained at all times in this complex field.
So something that's extremely new and fascinates me a lot is open banking. And we've seen the impact that open banking did in Europe. Can you perhaps just elaborate on what open banking is and how you'd expect it to change the African market?
Yeah, look, open banking promotes innovation. It transformed the financial services sector to be more user-friendly. I mean, it reduces banks' reliance on old infrastructure. Businesses are allowed to use different payment service providers. It speeds up the transactions between banks. So for me, it completely changes the banking sector, both from innovation point of view, but also from a customer demands point of view.
I couldn't agree more. Nafis, thanks so much for your time. Really appreciate it.
Thanks, Vian.